Hey guys, and welcome back to another weekly market breakdown. This week I'll be doing AUD JPY again. I am Osiris FX, and yeah, let's get right into it. So firstly, let's quickly take a look at what happened last week. So last week, as you can see by this news, this Monday PMI news from all these multiple countries, is actually what had sparked the risk-on scenario that continued throughout the week. As you may or may not know, risk-on scenario or market being in a risk-on sentiment means that the more riskier currencies tend to perform well, and safe havens such as JPY and CHF usually tend to get weaker. This actually in fact is a perfect match for AUD JPY, and that is exactly what had happened last week. Here, as you can see, this is the previous weekly candle. As you can see, there was very minimal drawdown to the downside, and it was about 130 pip week, with the week closing 115 pips above the previous close. As you can see right here, there is no key levels or anything really significant being broken. Here there is a trend line that is being broken. This is the 3, 4th, this is then the 5th touch of it being broken. So there definitely is a possibility for a retest somewhere around this area. But definitely do not take that just as a single confluence. Stack that with other multiple confluences. Then moving down to the daily, as you can see here, price simply just slowly made its way up this week towards a third touch that I did call out, and that third touch did in fact do TP1, almost TP2. In fact, for this pair I usually go for a 30 pip SL, as it only moves around 100 pips a day, unlike the other pairs that I trade being Euro, NZD and Euro AUD. There I'd usually have a 40 pip SL, as they are simply a more volatile pair. So here this was a possibility for a 1 point something percent this week to be made. Unfortunately, an SL was hit that I did call out, and that was being this sell in this area. This was a it was quite a good setup. I took a 1% loss on this trade. The reason for it was, as this trade happened on Monday, and due to the heavy PMI news release, and very positive PMI release that happened that week, especially from the United States, as everyone was expecting really bad numbers, caused me to SL out in this trade. This trend line has not been retested yet, and at this point I doubt that it will be retested, as we have simply started ranging in this top area. The third touch was possible in this area. It was a good setup, a quite minimal drawdown, 18 pip drawdown for a total of 40 pips made. So yeah, there, all in all, last week, simply just based off of this pair, you could have made point something percent of a percent if you take into account a 1% loss here and a 1 point something percent gain there. Currently what I'm on the lookout this week is either a break to the upside or the downside. Let me quickly show you. We are in a currently price has formed somewhat of a triangle formation. Let me quickly get that out. That's the top of it. That is here somewhat the bottom of it, if you take that wick or that wick. Either way, this is somewhat of a it's looking like a triangle formation. This pattern to me signifies that there's going to be some continuation in the market. I will definitely be looking for possible buys somewhere based off of this trend line. Sorry, it was this trend line. 1, 2, and then there's a possible third touch here. I would definitely love to pair it with either a 50 EMA or 100 EMA, but we'll have to see how that goes. Most probably the 50 EMA could get there to that area, so that could be a possible good swing up to the upside. Another possibility could be I'd say a small move to the downside that would end somewhere at the base of the triangles, somewhere here or somewhere in this area, and then a move to the upside which should break the top of the triangle. I would definitely be looking for if there is a possible clean break of this key level and then a retest of it as a possible trade, but we simply can't see that for now. Looking further, there is not much else. This is also quite a nice area. As you can see, there's a lot of wick fishing in this area, and there was a lot of consolidation happening here as well. So this would definitely be a good buy. I don't know whether it's going to get there, but this is definitely a good pending to have. Let me quickly enable any pendings that I have. No, I don't have any pendings, so then definitely this would be somewhat of a static position, so you wouldn't really have to wait for anything. You simply place it and forget about it, depending if price gets there near the end of the week, as this would be a key level paired with a 61 fib, and an area of interest, and a 320 EMA or a 200 EMA. Either of those being there would work. Preferably, actually, I'd have the 320 EMA somewhere there, so we'd definitely be looking out for that. Let's quickly get back on to the daily. Here on the daily, as you can see, there have also not been any strong key level breaks. So any possible key level, strong key level breaks, such as, for example, let me find you one. Such as, for example, either a key level break like that or a key. I would definitely be. This is my preferred, I'd say, variation of a key level break. As here, the break happens around the 50% or around, I'd say, the 60 to 40%, somewhere around the range of 60-40% of the candle body. Size, as you can see, half the candles on the top of this key level, half's on the bottom. And then price comes back simply for a retest, and there I do not even worry about it. This break I would consider iffy. I would want to have another confluence possibly with this. Simply anything like an EMA would do on a lower time frame, such as the 4 hour, as this is not that solid of a break of that area to me, and I would not be taking a single trade based on that. Let me quickly scroll left and right as that updates the 800 EMA. So another possibility could be an 800 EMA break and then a possible retest of it. I personally don't have any sells around this area as of yet, as I haven't seen anything there. What could possible trend line that could be drawn out could be one of these. Yeah, then that would be the fourth touch in that area. Quickly going up a time frame. No, that doesn't. It's the trend line's too high up, so it doesn't line up in that area. Well, this is also definitely a good trend line to keep. And that's about it for this week, to be honest. It was very simple, just uptrend, not that many corrections. I got out break even out of this trade once it did do 40 pips, so I'm not waiting for any downside or upside. Let's quickly take a look at the fundamentals of this week. Let me quickly update it. So right away at night, there's going to be some JPY releases, but I am more looking at these numbers coming from China, the non-manufacturing PMI. So basically this is the Chinese PMI, and if it does do well, then the AUD will strengthen and we will see further upside in the AUD JPY. Scrolling down, nothing that interesting that quickly catches my eye. Here we have another Chinese PMI, so we'll definitely be looking at those. And there are more PMIs coming from Europe. If these PMIs are going to be more positive than the consensus, then this could also add on top of the current risk on market that we're already in. So yeah, there's going to be more European Union price indexes. Going further down, then here we're going to have Wednesday is quite an important day for the AUD, as there's going to be some GDP number releases. This is going to be quite big, as from quarter to quarter every country is simply performing differently based on the amount of infections, and due to those infections the cities, the states, the whole countries, they react differently to it. So basically this GDP could be completely different than the consensus, and if there is a big range compared to the consensus, then definitely do expect some heavy moves in the market. Keep on scrolling down. There's going to be some trade balance on Thursday. And that's about it for this week. Then I could quickly also, for those interested, I could also talk about what happened last week and what is still going to be happening, and the current consensus that it is around risk on currencies such as the AUD and the JPY. So more of general news that last week helped the risk on scenario get back in get running was that Trump had finally in a way accepted his defeat and started the Biden and Trump administration, you could say, handover process, where the Trump administration would be handing everything over to the Biden administration. This signifies that there is progress going on with this presidential election, and that Biden is, you could say, day by day increasing his chances of actually confirmedly becoming the president. So, and Biden is obviously a positive for global growth and global trade. A one minus that could happen would be that as President Trump is about to leave office, he actually announced that he was going to try and either finish off or continue the heavy sanctions and the trade war that was going on between China and the United States. So definitely do keep an eye out, especially on his Twitter. If he does post something that is related to him progressing in the U.S.-China trade war, then that would definitely be a moment or even a day of risk-off scenario, and that would cause the AUD JPY to fall quite hard. And more, let's say, China to Australia local news would be that parts of Australia, or cities of Australia, actually some cities, the mayors and Australia itself are, you could say, they're arguing the fact that the coronavirus pandemic was caused and started in China. They are, in a way, you could say, supporting Trump's argument, saying that this is a Chinese virus and a Chinese disease. Obviously, this is a bad look for China, and no country wants to have that. You could say on their record ever. And Australia is in fact actually supporting that cause. And the problem there is that as China is Australia's third, I'd say, no, greatest. It's Australia's largest importer. It takes a third of all of Australia's exports. It imports all of those. China is taking offense that Australia is siding with the United States. Thus, they've already put and are going to keep putting tariffs on Australian goods. Let me quickly Google that for you. Yep, as you can see, there is just recently 212% on wine imports. That means that basically any wine in coming from Australia will not be competitive at all to be sold in China. Um, I also saw that China has put tariffs on here, yeah, barley and wheat, and yeah, simply this is a bad look for Australia, and this is also could potentially negatively impact them if China does start putting tariffs on um, high um, high profitable exports such as ores and yeah, mostly ores and coal that China does need from Australia as it is the closest country to it. So yeah, definitely keep an eye out on possible news that could be coming out from China this week regarding tariffs and Trump. And that's about it this week. I'd say hopefully it's going to be quite an uneventful and a technical week. So good luck and cheers. This was FX Osiris.